Hello, my friends, and welcome back. Thank you very much for being with me again today. Bad news from the stock market, and it's related to the sanctions, inflation, and lack of production. This article comes from Business Insider from June 29th, 2022. This is the title: U.S. stocks will fall another 10% before hitting bottom as the odds of a recession have now doubled, Morgan Stanley says. The S&P 500 will plunge another 10% this year, Morgan Stanley Wealth Management's CIO has said. I think it's going to be 10%. I read another article, I think yesterday, they expect 50% before it reaches the bottom, not 10. But Lisa Shalet said the odds of a recession have doubled, but they only expect a mild economic downturn. Lisa will be wrong, but she's still going to be invited to talk and interviewed as an expert or analyst, and she will be wrong. I guarantee you that. U.S. stocks brief bear market really fizzled out this week as mega cap tech names resumed their sell-off. The S&P 500 will plunge another 10% before bottoming out in the current recession-fueled bear market for U.S. stocks, according to Morgan Stanley Wealth Management's investment chief. The chances that the U.S. suffers two consecutive quarters of negative economic growth have doubled since the Federal Reserve hiked interest rates by 75 basic points on June 15th, making a stock market downturn increasingly likely, CIO Lisa Shalet said. We're going to look for Lisa in the future. And I'm quoting, accelerated Fed tightening has doubled recession probabilities, Shalet said in a weekly note Monday. The bear market bottom may still be 5 to 10% away. The S&P 500 has entered a bear market, having plunged over 20% year to date as investors grapple with soaring inflation, rising interest rates, and recession risks. The U.S. stock index recent rally seemed to fizzle out Tuesday as a mega cap tech stock sell-off dragged it down 2.01%. Shalet said that market would slide another 10% before bottoming out, because investors haven't yet priced in the Fed's newfound hawkishness. The U.S. central bank, it's not a central bank, it's a private bank, nevertheless, hiked rates 75 basis points this month in the largest such move since 1994. Analysts consensus forecast that for the S&P 500 has continued to climb while earning revision breadth has gone negative and GDP growth forecasts have been slashed, she said. Shalet noted the index has climbed 4.7% after the Fed's latest move, even though rising interest rates tend to cause stock market sell-offs. But while a Fed-driven recession looks increasingly likely, Shalet said investors shouldn't worry about it mirroring 2008 when the S&P 500 crashed over 20% in a single week. Inflation-fueled recessions tend to hit stocks' profits much less dramatically than credit-driven downturns, she said. This recession would be inflation-driven, not credit-driven, Shalet said. That means peak-to-through profits are likely to be down less than 15% weakens in real volume. Well, Miss Lisa Shalet, we're going to look for you in about 2 weeks or so. In 2 weeks, you're going to tell us, oh my God, we reached a 10%. Now we're going to go again about like 10 more. We'll see. It was another guy, the guy with Poor Dad, Rich Dad, something like that. I know that book. He said that the U.S. will, the stock market will plunge most likely 50% or something like that. It was an article I posted a little while ago, maybe 2 days ago, a little while ago. and it stated that it should go about, it would drop probably. These are all probabilities and predictions, okay? It's not that everybody has a magic wand and say, yeah, unless you're Obama, and you say, yeah, it's going to be like this. And we'll see. Thank you very much for being, not good news, nevertheless, not good news, even if it's 10%, 5%, 20%. Thank you very much for being with me again today. Stay strong, stay smart, look for the truth, and be just.